Here on the Transparent FX Academy, every day I give you my best market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the forex market. So without further ado, let's jump straight to the charts and see which is today's forex pair. Welcome back. I've been in vacation for 1 week. You probably noticed that I have not been publishing my usual daily video. I definitely needed a vacation. I've been going for over 2 years without 1 week off the charts. So now that I have that done, let's get back to work. So in today's video, I want to speak about EURUSD. Now, why do I want to speak about EURUSD? Because at the moment we really have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis. First, we will be covering the technical aspect of this market. Then we will go and see what we have from an order flow perspective. So COT data, commitment of traders, which is what the non-commercials and the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting on the monthly time frame, what we can see is that at the moment we are approaching quite strong monthly demand and support. In fact, from here the market started this move to the upside, and at the moment we are testing this exact same demand and support, from which there is definitely the possibility to see the market provide a rejection to the upside. So here in the monthly, everything seems quite bullish and we can expect a rejection to the upside. Going down on the weekly time frame, what do we see? Now here in the weekly, we can see the exact same thing. We can see that at the moment we are in a demand and support zone, which is exactly the previous low from which the market here tested and rejected to the upside. The market at the moment is testing this exact same level, and we do expect the market to get rejected to the upside. So also here in the weekly, everything seems quite bullish and we can expect a rejection to the upside. Now, the last time that the market tested a structure level here on EURUSD was exactly last week, where we basically tested this previous weekly support term resistance and in fact provided a rejection to the downside. So basically what this means is that at the moment we are kind of bounded in between structure. At the top we have this previous support term resistance, and at the bottom we have the previous low, which is again previous support, which is now again support and demand. So at the moment, we are in our range here from a weekly perspective, in between these two levels that we have just identified. Just a quick thing, make sure that you leave a like and subscribe to the channel, and also let me know in the comments the topic for the next video that you will like. Going down on the daily time frame, what do we see? Now here in the daily time frame, we can see that in creating this move to the downside, the market has also printed this M pattern. Now in general, after the creation of an M pattern, what you want to see is the market provide a move to the upside to go and complete the pattern at the previous support turned resistance. That is basically the completion zone of the pattern itself. But at least as a minimum, you want to see the market provide a retracement to the 0.382 of the Fibonacci taken on the impulse leg. Now in this case, the impulse leg is exactly from this high to this low. So here in the daily time frame, we want to see the market provide a correction at least to this 0.32 as our first upside target. Now, if we place a horizontal ray at this 0.32, what we can also notice is that at the moment, this is lining up exactly with this previous resistance, which is now again resistance. So overall, our first upside target is clear, which is the 0.32 of the Fibonacci taken on this daily impulse, which obviously would also be a rejection from the low that we have already identified on the weekly time frame, which is basically the support and demand area that we already spoke about a couple of times. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what the non-commercials and the biggest speculators in the market are doing, we can see how lately net positions have been dropping. We went from having 118k net positions down to having 38k net positions, with clearly shorts getting increased from an institutional perspective from 92k to 161k, and longs getting decreased from 212k to 199k. So the euro is getting quite weak. However, important to say, with the last report, we don't see shorts added anymore. In fact, we see shorts getting closed. 3k shorts getting closed, to be precise. And if we look in the past, it's been quite a lot of reports that we have seen thousands of shorts getting open. This is the first time that we see shorts getting closed. Now, if you see institutions closing shorts in a move to the downside, it means that a reversal needs to happen quite soon, meaning that what we had already identified from a weekly, monthly, and daily perspective by looking at the technical side of the market, which was indicating for a potential short-term move to the upside, is aligning with what we have from a COT perspective. So we do expect a short-term retracement at least to the 0.32 of the Fibonacci taken on this daily impulse. Now, how we will be approaching this potential longing opportunity with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective, obviously combined with the COT data. But when it comes to the confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. So with students, what we will be doing is monitoring price action from a 4 hour perspective and lower, waiting for the market to shift from an intraday bearish market as we have right now, and as we will probably have leading into the new week, to a intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding the EURUSD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and a good probability at that point for the move to the upside and for the market to retrace at least to the 0.32 of the Fibonacci taken on this daily impulse. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. Every day you get the new daily market breakdown showing you how to apply the strategies with the entry, stops, and take profits. And you can also ask questions and get the answer the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.